Good morning everyone, this is Richard Faulkner for Forex Investments. Now I'm just going to run you through a trade we took yesterday on the USDcad, and I'm going to start from the very beginning. So I'll show you how I actually map out a trade, what I look for, where I look to enter and where I look to exit. So first thing I do, I trade with blank charts. I don't have any indicators. I do have volume, but it's not on this chart. And that is the only thing that I'll actually trade with. I don't like a lot of clutter on my charts. You don't need a lot of clutter on your charts. You don't need a lot of indicators. You just need to know what you're doing. And it's as simple as that. So blank chart, first thing I'll do is I will look at the daily chart. So let's draw a trend line. Seems a pretty good place to start. Trend line there, trend line there. It doesn't have to be too accurate. The idea of the trend line is just giving you a direction. So anything below the trend line you want to be short, anything above the trend line or a trend line break you want to be going long. Okay, so, and yes, I know we called the market long down here below the trend line, but that's a different lesson. So just to avoid any confusion. So we get a trend line break. Excellent. We're looking long. Let's jump down to the 4-hour charts. Now what I like to use a 4-hour chart for is my fib levels. So very simple. Swing high, swing low, put your fib on. Now that's going to give you an area to trade. So what you want to be looking for, and just because it's a fib level doesn't mean you want to trade the fib, because people who have traded fibs will have seen 1,000 fibs hold and 1,000 fibs break. It's as simple as that. It's choosing which fib is going to hold and which fib is going to break. So obviously these are areas of interest down here. So once you've established your areas of interest, the next important thing, and this is what my trading strategy is based on, is looking for stop punts. So how do you determine where stop punts are going to be? Well, you just have to go through the process. There is a very, very good website called Forex Live. It's a news feed and news website, and they will actually they've got access to the order book, and they will actually give you areas of where the stop punts are going to be. But just because there is a stop punt doesn't mean the market's going to reverse. So just be careful when they're saying stops are here, stops are there. It doesn't actually necessarily mean the market will reverse. You have to line it up with a few other things. The next thing to do to find out where stops are is very, very simple. It's just a very visual thing. So any swing high, swing low, is, especially pins, is where people are going to place stops. So just get used to marking off your swing highs, swing lows, finding out where the stops could be and where you might actually be looking to trade. Now stops within a move, sorry, swing highs within a move. So you've got swing high, swing low here. This is a fairly decent move. These stops aren't going to be as effective as the stops you get up at the swing high. And you see here, basically we moved up, took the stops, consolidated, and then moved up again. So it's just a question of timing the seats, finding out where these stops are going to be, and watching how the market reacts when these stops are taken. That's absolutely crucial. Finding out how the market's going to react before these stops are taken. Okay, so as a rule of thumb, just stick to the swing highs, swing lows. Those are a good place to look for stops. Okay, so let's just go through the psychology of a stop. This here is your swing high. This here is where your stops are going to be. Obviously, you're going to get traders who have a trading strategy of buying the market as it breaks a new high. Now that obviously generates stops or generates liquidity, which people are then going to sell into, which is what the institutions are looking at. So anyone who's buying is providing liquidity for the market to be moved down against them. So that there is a terrible trading strategy. Anyway, so if you're going to buy the market, don't buy new highs, buy retracements, because you're basically providing liquidity for the rest of the market. So there's stops up here. Anyone who's sold this market is then put their stops above here as well. So there's two kinds of stops generated in this particular level. Where's going to be the next stops? Well, anyone who's bought this is then going to put their stops down below this level here, previous swing, which is what we were looking at, is what we wanted, and is what we took. So there's your two scenarios, and it really is as simple as this. So you've got a fib level, you've got your stops taken up here. Where are people going to put the stops? Well, they're going to put the stops below the previous swing. Where are we looking to trade? We're looking to trade in the stop hunt area. Basically, the market comes down here, just below the fib. You're waiting, you're patient, you wait for the stops to be taken, and you take the stops, and that's a 76 pip move. And let's have a look at this on a 5-minute chart. So this was our entry. Came down, you can see the blue area is the stop hunt. So we came down into the stop hunt, moved out of it, entered, had a 5 pip drawdown, and a 76 pip move, or 7.6%, which over the course of an evening, obviously while you're sleeping, isn't a bad trade. Now, exits. People get very het up about exits, and it's understandable. They are probably one of the most difficult things to master, and to have a trade come back against you after you're 76 pips up is soul destroying and extremely bad for your psychology. But ultimately, what you're looking to do is trade stop hunt to stop hunt. So, as I previously mentioned, swing highs, that's where you're going to find your stops. This here is obviously our entry. This here was our move up. We came up above where these stops were, and then began to move down, and move down pretty quickly. And obviously when you see this, when you start to move down, I was actually hoping for a bit of a bigger move on this, and we may well get a bigger move up to this level here, which would have been 233 pips. But because of the reaction we got above this swing high here, I decided to take, I'll take my 7.6%. You see, if you're looking at, you're looking at the market going up here. Okay, so that's 227 pips. So that's 22.7% profit, which sounds great, absolutely fantastic. Problem being is, if you're holding on for that, and obviously we have a 10 pip stop, there's nothing to say the market can't come down, stop you out, and then move up. And if you tend to go for these bigger hits, then you're going to find you get stopped out, break even more often than not. So what I would prefer to do is take 7.6% as opposed to 22%, and just continuously take small profits, and let my account grow each and every day, as opposed to one big hit during the week. And like I say, your psychology is, when you come and get stopped out after having 7.6% on the table for break even, it's soul destroying. So anyway, that's the USDCAD trade, and it really does get as simple as that. There isn't really much more to add. So I hope you enjoyed the video. If you are interested in learning more, or you do want to see us trade live in the market, I will just show you very, very quickly our Facebook page, because we're offering a free trial on our live trading room. So if we go to Facebook. Okay, so if this ever loads up. Right, here we go. Okay, so Forex Investments is our Facebook page. You sign up for a free trial here. Just click on this tab here, sign up. So we trade from 7 a.m. through the UK session and US session. We also post a lot of videos and technical analysis on our Facebook page as well. So you've got trades on here. You can have some trading ideas. We've got a bit of money being made there. Video for the week, a bit of fundamental analysis, etc., etc. So, so it's a really useful tool for your trading trading day. And if you do want to come and join us in this trade room, just come and use us as an extra set of eyes. I mean, it's free. Be free for 3 or 5 days. Obviously, there'll be a subscription after that. But by all means, come and join us. See how you get on. If you want to join, that's great. If you don't, there's absolutely no obligation. Okay, so that's Forex Investments, and we hope to see you in the room. Okay, thank you very much. Bye bye.